CoinGecko's good.
Well, I just hit go live, so we'll see if this worked, but I think it did. So, bada bing, bada boom. Welcome to Wise Beyond Bitcoin, where you come to wise up on crypto. My name's Lucas.
My name is Ryan.
And
my name's Jacob.
Yeah.
We got the trio. Yeah, it's a pleasure to be here. What a beautiful day it is because, as you know, we just had a historic drop in crypto this last week. A major dump caught a lot of people off guard. Was unexpected with all the bullish momentum, and yet today, here we find ourselves rallying already.
Not gonna look at this.
Yeah, in fact, for a few days among the crypto market, YouTube and other educators out there, it was, well, hopefully you all took profits and get ready because we could be in for some dark times ahead for a little while. I mean, anyone who's lived through the other cycles in 2017 and beyond, they recognize when the market changes, there's nothing you can do about it. That time comes. So,
but it's also true that we've had bull markets where there's been some pretty nasty dumps that have occurred that haven't thrown us off the track. So it's not like it's a given.
Okay.
I think it's still up in the air. What the future holds in the near term.
Okay.
But go ahead.
I gotta agree with you.
I might be getting too deep into the discussion too early.
No, I'm scrolling down real quick because what you said brings me to a point. Right here, boom, I found it. So look, overall, last week's historical capitulation event resulted in roughly 9% to 9.5% of the current market capitalization registering as unrealized losses, which is actually quite small when compared with previous losses seen in March 2020 and November 2018, where you saw 44% of market cap or 87 to 114% of market cap. So here to see 65 billion, 9% to 9.5% of unrealized losses, we're talking we're talking a drop in the bucket. There's different metrics to measure, but I would say that in the world of cryptocurrency, it was it caught people off guard. And anytime you take a dump that quickly and that sharp, it's going to hurt. It's going to hurt your portfolio. If you're leveraged, it's going to wipe out a lot of leverage positions. But when it comes to corrections and cryptocurrency, 90%, 80%, sometimes 70% pullbacks, I would say that this was not yet maybe sign of doom and gloom yet, although all times come. So okay.
Yep.
You brought me that point, and I'm going to refresh it because Jacob brought up a good article, a FUD article. We got a lot of good articles to talk about. So strap in, and we'll catch you up on a week's worth of information and catch you up on the crypto markets, give you something to chew on. We do have nomics.com and CoinMarketCap, two great resources for looking at a list of cryptocurrencies by market cap for your educational information. This is educational resource. This is not financial advice. FYI. So what is it that you like to click on when you're on nomics.com? Because I know there's different metrics.
Click on the one-day change. That heading.
There we go.
See that.
Bam.
What prime movers today were. Polygon was up over 100% earlier today.
Yep.
It had a great day.
And now it's up still 58%. Luna 60%. OMG Network, interesting. I don't know about that. That's curious. It's like I felt like they've been. I remember them back in the day. They've been dead, and now all of a sudden they're alive. That to me is one of those fishy projects. But maybe they're a sleeper. Maybe they had people working in the Bat Cave, but I'm pretty sure that their GitHub's been like silent. So if so, we'll see. Maker is huge. Yearn Finance back, Uniswap, largest DEX on Ethereum and everything. So we're look at this. I mean, only in crypto. If you're used to traditional finance, then this may shock you, but this is all welcome to the wonderful carnival world of cryptocurrency, where 47%. This is one day. Yeah, that's right. 60%. This is one day change. That is right. So when you hear of pullbacks of 50% and 60%, it may sound drastic. However, when you've looked at month after month after month of 60, 70, 80%, 100%, some crazy gains, it's healthy for markets to correct once in a while. And I think that getting a lot of those leverage positions shaken out maybe has done a lot. However, let's talk about some of the influences out there. You got some information, Ryan, that you want to talk about influence in the market.
Okay, yeah. Well, there was some. There was a tweet that kind of shaped the narrative today, I believe.
Okay.
I don't know if you have the article on that or the tab, but it was Michael Saylor.
I got the tweet right here.
Yeah, it's the Saylor tweet. He's helping to organize and host a meeting and to create a Bitcoin mining council. They're going to kind of promote proof of stake and what happens when it matures. So anyway, this was just a kind of an announcement saying that, hey, the miners are looking at it. There are people looking at the energy usage, and that was great for the price. People like that.
Did you have big news. Did you have an article pulled up with that as well, or was it the Twitter? I don't know if the tweet.
There probably is. There is an article in there, but that goes into it deeper. Bitcoin. It's the CoinDesk one. It says Bitcoin rises to near 40K after Musk tweets about Bitcoin's mining's possible or promising renewable usage.
Okay.
But it really didn't get into anything too deep. It just tied the tweet to the price movement.
So that's interesting, and we'll continue to be a part of that education and voice because, we talked about this I think we talked about this on the last stream, but if you really get into the economics of the energy usage of Bitcoin and all the energy that it currently takes for fiat currency, it's so ridiculous. It's kind of like, Elon Musk is really missing out on some serious engineering calculations. He's really missing the boat. It's like
Well, it depends on if you think he's an honest broker, and he's just discovered that he's been in crypto for this long. He's got this much money, and he's got all these people that are smart, and he's just now, a couple weeks ago, heard about, guess what? It takes a lot of energy to mine Bitcoin. It's like, and he makes that a tweet. Okay, I think maybe he knew about that already. So I don't know how much, I think I might read into something. There might be deeper motivations going on here.
I agree. I feel that. That being said, it's just, it just shows a lack of oversight. I'm going to tell you this, if I was supposed to be in one of your toys that you're shooting out to outer space to go live on some other place, and you're supposed to be doing calculations for the trajectory and the rations and the living and the oxygen. I've done permaculture, sustainable living systems. Like, you want to really get into the resources and what I'm just curious how much, and then you're going to do all these, but you're going to sit here and tell me that you think Bitcoin is some kind of energy constraint compared to the modern currency system that you're getting tons of subsidies from your local government and tax breaks. Nah, I don't.
Let me add another layer to that. That modern currency system, which helps redirect a lot of resources to make possible great things like the Pentagon's budget, the military budget. And guess what's the largest polluter in the world? Pentagon. The military.
And NASA,
so it's like,
and their budget from NASA went to SpaceX. So congratulations.
And that's not factored in when you look at when they say what's the monetary system's energy footprint. They didn't factor the Pentagon's pollution in that. I assure you.
No.
So it's understated.
Highly understated. So we look forward. Michael Saylor, thank you so much for continuing. And he's got an engineering mind. So hopefully he does pull in some of these metrics into the energy consumption and the creative destruction when Bitcoin cryptocurrency takes over financial intermediary institutions that are no longer relevant. All the energy those jobs took. Literally a human being driving to work every day. The money you pay. You can measure that. There's a measurable amount of energy you can quantify for your actuaries to come up with these utilitarian calculations, right?
Well, it's going to help economize on all that, on all the resources that are going to be freed up.
So he's got a great work in front of him. It should be easy. It should be fun and easy for him to do because it's like there's just so much creative destruction. Go to this industry and look at the energy saved. Go to this industry and look at the energy saved. Just start tying them all together. Okay. I want to also get to. We should probably go back to the market update. Was there more market update that we missed? I was going through the top gainers. We can also.
Harmony had a good day.
Yeah, Harmony was looking pretty good too.
Mm-hmm.
Harmony had a good day. Let's see what had a bad day.
Oh yes.
Sable.
It's fared quite a bit better than Mini. It's still $1.53. in the middle of
I
all
remember a
this.
month or so ago when people were saying, it would be $1.18, $1.21, and here it's at $1.54 after a major pullback. So,
Pretty nice.
I would say that a lot of these cryptos, Cardano has fared probably better than most. I would
Yeah,
think,
I would think so too.
and a lot of people are very bullish on what Cardano has rolling out for the rest of the year. So that's definitely one to look at. Already at $1.53 as we speak. And
Right.
let's see here. Okay, so checking out what I'm pulling down. This is the outflow, the weekly crypto asset flows.
Mm-hmm.
Here's that article that you had me. Did you look at this one yet?
Yeah, I took a look at it. It just summarized that that there were altcoins were seeing the inflows out of the out of like Bitcoin and ETH funds. I think essentially is what it is.
Because that article reminds me of. There we go. Boom. This is the one I was thinking of. That's the chart I was expecting to see.
Oh, there we go. Yeah, that's the one I was talking about.
That's the one. Okay. This other one is crypto fund. Crypto funds suffer second straight week of outflows. So
Okay, yeah.
investors rotate.
Yeah, confused on, yeah.
Yeah, cool. Pull that article down. It's talking about the same thing, but this is the metric we were wanting to see and share and show. So
Exactly.
we'll go back to this one. And then you can see a lot of these other popular assets that things are flowing into. Polkadot, Bitcoin Cash, Binance.
Mm-hmm.
What's your take? Altcoin season, Jacob. What do you think,
I
brother?
think so. Yeah, I mean, we saw Bitcoin. Oh yeah, Jacob, go ahead.
Well, I personally think we're going to see a big altcoin move, and I think the altcoins that are going to move are going to be the layer one solutions again. But I think the next big mover is going to be Polkadot because I don't know if you've seen, but they had their Polkadot Decoded event pretty recently where they basically had a event for like about 2-3 days where they just covered altcoins within their ecosystem in kind of like what's the word? Kind of like a Comic-Con event, but virtual.
Nice.
Okay. Yeah.
It's the best way I could put it, but obviously for crypto.
Yeah, but for their ecosystem, so like Shadow X, Chain X,
Yes.
Kusama, like Akura or shucks, there's I can't.
Akura and Kurara?
Yeah.
I could never pronounce it right.
You know what I'm talking about? Acura
Yeah.
and Integra. No, Integra.
Yeah.
So
I missed that though. That I didn't hear about that. Did you tune into that?
I tuned into some of it, and I didn't get to tune into. Obviously, I didn't tune into every single one, but there were some really interesting things going on. There was actually one segment I was watching that they were explaining how they're using PCX to funnel Bitcoin's liquidity into the Polkadot ecosystem, and how Polkadot interoperability is going to be working. So they're really relying on not just Polkadot as a token,
Mhm.
but the entirety of their ecosystem to function well.
Nice.
And
Sounds very good.
I enjoy seeing someone who wants to improve what's already being worked on.
Yeah, I do.
well, what's cool about Wise is that because it's literally an Ethereum backed token, it's a bond that just you earn Wise token interest. Look, it's up 24%.
Yep.
So the
Funny how
bounce
that
back, for those that have been hodling for a while and wondering how this thing works, there's your volatility, there's your growth, and there's your security, and boom, there it goes back up with ETH. So after this
Exactly.
tragic correction, here we go. We're still at a good place to be from the beginning, and it continues to grow. What's exciting is all the other projects going on connected to Wise. Wise Harmony
Yes.
One. You talked about how Harmony One is. I mean, it's a sleeper because it's still the first year. Wise is less than a year old, and in the first 6 months, it's on Polygon. Let's look at the big top gainers. You're seeing Matic, Polygon, boom, 60%. That was one of the biggest gainers.
Right. Right.
Harmony One, another top gainer. Well, these are two platforms that Wise Token is associated with. One of their top tokens to add liquidity and get rewards on their platform. So, and Polkadot, who started Polkadot? Gavin Woods, one of the original developers of Ethereum, with Vitalik and Charles from old Charles. I don't say his last name, but from Cardano. So we're looking at the beginning of a whole new blockchain technology ecosystem that's being developed to help take on the world economy. That's what that's really where we're at, and that's why I like developer, the YouTuber Hashoshi. He's a developer as well. He's got a great YouTube channel, and he talks about where when people talk about the Ethereum killers or these other smart contract platforms, he talks about where these are going to be at 6 or 7 years from now, and that they'll all still be working together, most likely, and some having different market shares. But when you look at automobile industry, supply chain management, energy, food, and all these things, titles and titling for non-fungible tokens, identification, money and loans, there's so much that's going to be moved and currently moving on to blockchain and cryptocurrency technologies that we're literally just in the beginning. That's what's so fun about these projects, and what's so unique that I love about Wise. I feel it's just a great sleeper project, although they're not asleep, but it's the tentacles that reach out to they're working with premier chains in teams all over cryptocurrency. Period. You want to go to top stores, you're going to find Wise token on every shelf. And how do they achieve it? Well, by like cryptocurrency standards being trustless, decentralized, ethical, no owners, no keys. There's the bank, there's the crypto, and it's all done through smart contracts. So, right. I'm excited to see, and of course they haven't even gotten into the lending, and it's the DeFi aspect. When they kick it up that lending to the whole next level, I mean, now you're talking about the ranks of Aave, being able one platform to borrow, lend,
right,
all that good stuff. So,
yeah, you know what Aave's trading at?
Aave is jumping up, $380 per a 33% gain. It's another one of those top gainers. Aave is one of them. And Aave, what is Aave? But Aave is a premium. If you're new to crypto, or if you're a little bit familiar with crypto but not a lot about DeFi, Aave would be one of the premium decentralized finance products on Ethereum in the world of cryptocurrency. Okay, period. Uniswap and Aave is one of the first platforms that allows people to take ERC20 standard tokens and lock them up. Stable coins, other tokens for borrowing and lending and earning interest, all done without intermediaries. So I would say that no surprise to see the growth in Aave, and for long-term fundamentals, I would say Aave is definitely one to take a look at, in my opinion.
Exactly. Well said.
Let's see. Is this the article? Yeah, here's the Medium article. Jacob,
that's the one.
Talk to us, brother. Bitcoin, Ethereum are dead. Tell us about it.
Okay. It's actually pretty interesting. Not to say anything negative about the person who wrote this, but I think it's very much a personal piece. If you look through and actually read in between the lines, a lot of the points that are being brought up are from personal experience. And so if you read right here, you should have seen the nasty messages they sent me from BitBoys, which he's basically summing up crypto as a whole as a Ponzi scheme and it finally falling apart. But the issue is the fact that fiat is in it of itself somewhat of a Ponzi scheme.
Somewhat. It is. Actually, the thing is that this is called the Nirvana fallacy. It's when people critique something and they don't apply that same critique to the world that they live in right now. It's like, okay, great. You're saying that the value of this hinges upon other people buying it and finding value, but so does the world we live in right now. as far as it being a Ponzi scheme, I what you said about the current financial system is more reminiscent of a Ponzi scheme. They literally have to mandate you use money and accept it. That's how much of a Ponzi scheme it is. Like literally, legal tender laws say you must take this money for all debts, public and private, or else we'll send you to jail. So I mean that's
You want to really the best reason why this is not even applicable. Ponzi schemes are black boxes. It's not transparent. You don't see how it makes money. You don't see the revenue flows. You don't see the and if you're talking about cryptocurrency, it's all transparent. The contract's auditable. You can see the supply creation. You can see the founders, whether or not they have keys or tokens. You can see the distribution. You can look at the tokenomics. Show me a Ponzi scheme that gives you a white paper with all that kind of
exactly. No, you're right.
And then let third parties audit it.
No,
just really quickly before we move on into the next part of the article, I did find a meme that I'd love to share on this topic. So just stop and tell me if you know what coin this is. I'm going to start listing off some information. A 27 trillion in circulation with an unlimited market cap. Only one node, right? And 25% of the supply was minted in the last 6 months. 1% of holders hold 30% of the total supply. What cryptocurrency is that?
It's the dollar, right?
It's the US dollar.
So that exactly, and like you said, Ryan, that's the best definition of a Ponzi scheme is one where there's a black box and like it's a mystery bot that's trading for you and making all the money that we can't explain the algorithm. And in this case, like what you point out, Jacob, it's really the Federal Reserve. That's the biggest black box. I mean, literally from one election to the next, you've got different policies, and you don't know how much money is going to be printed from one year to the next. You don't know what the interest rate's going to be. You don't know what the reserve ratio is going to be. There is no standard for how much money is going to be printed from one day to the next, and nobody bats an eye. Like literally.
So let's look at the second on that list below sunk cost fallacy. It says irrational investment bias. So let's take what Lucas just said. They print a bunch of money, drive interest rates low. People don't know what to do. There's no way to earn money safely. So yeah, everybody piles into stock markets and buy up things and push up stock prices. Like look at Tesla, look at Apple's situation going on there with the bank that he created. It was loaning up money. There was some sort of a monetary supply story there. That fed into the tulip mania situation, right?
Yes.
So we're back to
to there being a banking money printing scheme at the root of the mania that's being ignored.
Right.
Yeah. It's already old technology. So,
this is my favorite one to debunk. So some of the most interesting thing about blockchain technology is the fact that it is an immutable ledger. And in the case of Wise token, it's an immutable smart contract. The great thing about an immutable smart contract is it doesn't change. It functions like day one. Wise will work the same way it works now, 10, 20, 50, 60 years from now, and that will not change. One of the interesting things that I find about the idea of this old technology is that they're building upon it. To say Ethereum's dead when it's moving to ETH 2.0, it just completely undermines all the development that actually is being currently implemented into Ethereum.
Right.
Saying it's an old technology while it's still being built out is like saying, well, Tesla's old news because they already exist.
Well, you could also say central banking is even an older technology. So if old technologies are the things that we're going to be without,
but I think, and also closer to his point, I think that he's missing what Bitcoin really is. I heard, and I'm not a computer programmer, but I heard someone explain it like this. I remember dial-up internet days. Remember that dial-up internet where you had to listen to the phone? You had to wait for all that. Okay. Well, that that technology is still what goes on. Like we still use that on fax machines. Like that technology is still there, but the Wi-Fi, the layer we've built on top of that with routers is just a higher layer. We're still using that layer. It's not like we got rid of it and got something else. We've just built something on top of it to make it more secure and faster. And so so Bitcoin, when you really understand how cryptography and cryptocurrency blockchain technology works, it's taking our existing HTTP, our existing computer systems, our existing hardware in what we do, and using them in an efficient way to make more efficient communication and transactions and to store information on a distributed ledger instead of having it all on one server that you have to keep secure. So it's a layer. So for him to be like, this is funny. He says the Ford Model T, that'd be like, oh yeah, cars were so yesterday. It's like, bro, they're still using 4 wheels, an engine, a transmission, axles. Like, you know, do you really think it's that different? You know, like really? Like incandescent light bulbs, sure, we've got, but do you really think it's that different? Like the technology of burning coal or gas to turn a generator to make electricity, like it's still pretty much the same. All right. So it is pretty groundbreaking. This is definitely a leap forward. But yeah, no, I think this guy, here's why. I think in a time like this, if you can come out and say that, it's more shock and awe. You'll get more people to look at what you're saying because they want to hear. But it's nonsense.
After
look,
all the people who've been made fun of for the quotes for saying Bitcoin is dead over the last year, you see the I have a friend who makes T-shirts that are just lines of quotes from famous people talking about Bitcoin being dead. And it's obviously, not true. So after all of this awareness of these horrible calls, and this guy is going to come out and, and do it again and make another horrible and do it again and say, I'm going to put my foot in my mouth just the same way. It's like, okay, I mean, that's just like you haven't even Googled this, man. Just look it up.
And I would like to say, people take for granted that nobody has all the answers. Where do you draw the line? Like, where do you go into the world of finance and be like, no, this is a guaranteed hedge, and that is a mere speculatory hedge. It's like, okay, buddy,
There was never a person who bought gold only to regret it.
The most interesting thing I found, if you actually look at the stock market drop and you compare it to crypto versus gold, more people actually bought crypto versus the traditional hedge against inflation. Mm-hmm. And it's very interesting to see that, I mean, if gold was the be-all, end-all hedge against inflation, like how people in these big financial institutions like to prop it up as it is, gold should be reaching all-time highs, but it's not. It's making small moves compared to the waves that crypto has been making, not only in the news, but also percentage gains.
Right. Well, it's that meme. It's the guy turning around, looking over his shoulder at the young woman walking by.
I'm over. I can't.
Gold is that first woman, and the guy is not looking at her right now.
I can't read this article anymore. This is just too much. This is silly. It's over the top wrong. And if he wants to talk about it, Jared Brock, if you're out there, feel free to reach out to us. I'd be happy to talk to you on Zoom and hear your thoughts. But it's why people ditch PayPal for money transfers and move to Wise. What is he even talking about?
I think he must be talking about something different. There's other Wise products. And I don't believe he's talking about Wise Token.
Sure, okay.
And I don't know what he's talking about ditching PayPal. PayPal is rocking and rolling.
I know that's what I'm trying to say is I don't really know what he's talking about at this point, and he's made so many pointless claims, that I just it's horrible for the environment. We're hearing that. I mean, that's popular to say right now.
That's a popular one to debunk.
It's not true. Governments will increase regulation and taxation. That's not really an argument for something.
That one's interesting. Because I did find out something super, super interesting about that $10,000 that a lot of people are spreading this FUD narrative over having to report $10,000 gains in crypto.
Mm-hmm.
That's for businesses. So if you're not a business and if you're a personal entity, at least from my understanding from what I've read, you don't have to necessarily report that $10,000 gains. Granted, you will always have to report your taxes to the IRS. You will have to do your taxes, but
I'm not sure on all that, but I don't believe that his argument is that crypto is dead because it's going to be taxed. Because the story right now is about how Biden is about to raise capital gains taxes on everybody. So, but we're not hearing about we're not hearing this guy say get out of the stock market because capital gains taxes are being raised. He's just so it's like it's an incomplete argument. It just seems to me like he's writing an article he's not prepared to write.
Right, that's what I'm trying to say. He's not, and there's so many contradictions in his article that it gets pointless to debunk anything. Because, I mean, for example, when he talks about increased regulation, like that's very bullish in cryptocurrency.
Yeah,
it means more widely adopted.
Right, right. Like he's very bullish on crypto, saying that governments around the world are going to start figuring out ways to regulate and pass laws around this technology that's not going anywhere. So to go,
I'm glad we brought up that, because that's a good segue into this next article.
Which is do it, brother. I pulled it up.
Where's it at? It's okay. Yeah, Feds. Brainerd, yeah, that's
breaks
the one.
Down the CBDC policy considerations, sees price pressures waning in the future.
Yeah, that's the price. So basically, saying he doesn't think that inflation is going to continue to be a big problem. I kind of tend to agree with that, but that's not what I brought this up for. You keep scrolling, you will find a section right here. It says Brainerd also warned that the growth of private monies might prove detrimental to the U.S. payment system, which collateralize your bank, and you could create a bank. It was free banking; anybody could enter. And this period, she claims, was unstable, and inefficient. And here's kind of my rebuttal to that. So Canada had a free banking system too during the same time period, but theirs was different. They lacked a key regulation that did create instability in the U.S. version, and this regulation was limiting or banned most states. This is not every state in the United States, but most states banned branch banking, which meant that you couldn't have more than one branch in a single state. You'd open a bank in that area, and that was it. You couldn't have a branch down in another city or in another part of the state. You just had your one. What does that mean? Why is that important? Well, it reduces competition, and it leads to like a regional monopoly. But it also creates a situation where bank loans become concentrated in certain areas, a town, an area. And if that area goes through a recession or a panic, that whole town could default, and that bank could go bankrupt because it's concentrated loans in one area. It's not diversified. And then the third problem with this branch banking thing was that if a bank did run into problems, they could have money, but it might not be liquid. They could be solvent technically, like their assets could match their liabilities, but because of liquidity issues, they might not be able to make all their debts. They might not
meet their demands
pay their debt in that moment, right?
Right.
And so normally, what would happen would be another bank, and would be able to go in and acquire it and purchase this bank, but that couldn't happen because the branch banking was illegal. So what this did was it just created a lot of instability. You had banks that would be monopolies in an area, and then there would be a problem, a crisis, and then they would go bankrupt. So you had this appearance of instability, but a lot of it was driven by this branch banking regulation, which didn't exist in Canada. And interestingly enough, during the Great Depression in the 30s, not a single Canadian bank failed. Yet they did not have a central bank to act as a lender of last resort. So you see that there is stability inherent in these free banking systems.
In decentralized systems too.
But it needs to be, it has to be competently structured.
Sure.
That's kind of the main point. So that's just my rebuttal against this single line in this article about the instability of private banking in the United States in the 19th century. And the article itself is interesting because she does go on to say that they are looking to create a central bank digital currency, and they're kind of looking towards stable coins. I believe it's obviously more the model. They don't want volatility, but that's generally that's the thrust of the article. But the part about the private banking being unstable, that's really wrong. That's just historically inaccurate. But it does make sense. The inaccuracy, you would think, okay, so she just didn't know, she hasn't read. No, she's an economist. I mean, you could Google this stuff in 5 minutes and read it and figure it out. It's an institutional motivation. I mean, if this did supplant, if we went to a private banking model,
her job
wouldn't exist.
Right. So she's speaking for her company. Right now, she's speaking to protect her job and her company, which is the banking system. And she's out there saying, whoa, 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 be careful for that free money out there that's transparent and you can see how much of it exists and how much is being printed. Whoa, 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 whoa.
Not a monopoly.
Yeah, we can't guarantee you that's what's going to be good for you. But don't worry, that was consumers and businesses to risk, which sounds to me like a foreshadowing of some, like Ring Around the musical chairs.
Is that like a threat?
It's like a threat. Some stable coins are going to be valid and some won't, depending upon underlying arrangements. So it seems like there will be some deemed worthy and some maybe not when it comes to the future of stable coins. And we've got USDC, Tether, Maker. There's a lot of different ones out there, so it'll be interesting to see how that plays out.
Yeah, I agree.
I absolutely agree, and I think that alludes to the decentralized stablecoins like DAI.
Right.
I think those are the first ones that are gonna see that pushback.
Yep.
But those are also the ones that will have the most strength because they're decentralized. It's like a Bitcoin network. Once they're truly off and running and working, they're there for people to come in and out of regardless. Which makes me think of Tornado Cash or Blank Wallet. Yep. I don't know how far that's come. It's been a while since I've checked in on that. But so the issue, okay, this is really an interesting article. I
thought so.
Yeah. The issuance of a CBDC in one jurisdiction does potentially have significant effects across the globe. And so it's very important for us to allow many central banks progress on CBDCs.
That's a good segue. That final sentence is a good segue into another article I sent you, and it's from the IMF.
Got it up already. Bam.
And it's talking about how it isn't necessarily a bad thing, or it's a good thing to have competition in reserve currencies.
Yep.
That was interesting.
Yep, that is interesting. That's awesome. That's wonderful news to hear. For cryptocurrency, I mean, when you look at how many different stable coins and crypto assets there are, to hear an International Monetary Fund official embrace more digital currency. Well, I didn't say digital currencies, but more currencies. Choice in currency for a stable world. And that's true. I mean, absolutely.
I just wonder how far out do they want to take that argument?
Well, it's coming from the IMF, right? So who knows how far they want to take that argument. But if we just take it for that value, for face value, it's great. It's great.
Yeah.
And it's true. It's absolutely true. We could use some, the International Monetary Fund, I think historically has been a proponent of competition in currencies, right? The dollar, pesos, yen, won, Deutschmark.
I associate them with telling third world and second world countries that have debts that they need to cut their spending and get their debt under control so they can have access to tariff-free trading blocks and different kinds of loans and the IMF membership and all kinds of things that hinge on it, like Euro member status. Like they're kind of like the parent that says no, you have to clean your room. Yeah, and they're not well liked amongst many groups of people. They see them as forcing austerity on poor people and using like gangster tactics to intimidate countries to get taking loans they shouldn't take.
You mean like Confessions of an Economic Hitman kind of stuff?
Yeah. That story.
Like, oh, we're here to help you with the loan. Oh, you can't pay the loan. Well, what kind of resources do you have? Ooh, not a lot. What kind of labor do you have to help us extract them? Ooh, we'll just have to tax you on that too.
And I think something that's really interesting about that is, if you think about it, a lot of the world actually uses the US dollar as a reserve currency. And with the inflation of the US dollar, I believe that we're going to see over time a kind of a shakeout from the US dollar being the reserve currency and kind of a push towards blockchain technology.
Yeah, I mean, I hear you. I think we'll see the special drawing rights.
Yes,
It's a currency unit they're trying to come up with that's going to potentially be a replacement. I think it's a basket. I want to say it's like a unit. It's a currency unit they're creating, but it's collateralized by a basket of national currencies. I want to say.
Interesting.
Yeah, or it could be. There's also talk that gold and other commodities could make up the basket as well. There's all kinds of little things in the works. But I hear you about the dollar. Yeah, I think there's a lot of demand for on the part of rising powers like China and Russia, for their kind of alternative that's not dollar based, essentially.
Oh yeah.
We'll see how that plays out. But I think that's all bullish for crypto, because what's the value of a currency that's being printed at mad rate when it loses its status as a reserve currency? I mean, that's not going to be pretty. I mean, that's
well, yeah, we've been talking about this for a while. On some respects, what you brought up, Jacob, is an astute observation, because this has kind of been many people have been talking about this for years, wondering when are other countries going to drop the U.S. dollar as a world reserve currency? When is enough going to be enough? And there have been summit meetings and talks about lessening the dollar's position for being the petrol currency, and allowing other currencies to be used for purchasing oil on the world market. But the reality is that once the dollar is let go of, once other countries have options to choose from, and the U.S. dollar, it's more than just inflation. You're going to see, even if inflation can be staved and controlled, which in economics, we can talk about many fancy ways you can the stickiness of certain things. You can prevent inflation from trickling down and being seen. Like right now, a bunch of money can be printed, but it could be held by institutions and banks and let out to certain industries, chunks at a time, so that the whole market doesn't feel the brunt of a helicopter bend, type of hyperinflation with wheelbarrows. But
yeah, it would still be a challenge, right? I'm sure. You'd have to raise interest rates pretty high.
Yeah. But what we're going to still see, here's other ways that you'll see the dropping of it. You'll start to see stores close down, because maybe you were so used to all these cheap goods coming from all these countries that all use the dollar, but now that they're moving to other currencies and they're not exchanging for the dollars much, all of a sudden you don't have as many options in the grocery store or in the department store. You're seeing shelves empty. You're seeing items taking longer to be restocked. So there are many other ways that you'll see the degradation of the currency through inflation and other countries dropping it. So either way, you're going to see a massive depression in the living standards of the United States and the American culture. Period.
If it plays out.
Oh, it's already played out.
Yeah.
It's going to play out. I mean, it's kind of like the time we grew up, like growing up. If you grew up in the 80s or like the 70s, 80s, pat yourself on the back. Enjoy being able to have gone to concerts and lived in those golden ages, because chicken's coming home to roost. You can only print billions and billions and trillions for so long. And literally, we're living at a time where there's not just other countries that are fed up with it, but there's actually another technology that's displacing fiat in general that's giving alternatives for other countries. Right. It's not even just a competition among fiat. Now there's literally a bridge to a whole industry class of assets superior that will make the dollar, the Federal Reserve, or the being the world reserve currency, a moot point. I think
well, I think it will definitely tear into its market share. Continue to.
Oh,
yeah.
That was my rant.
I was looking at the chat. It looks like Giro News said that she sold all of her crypto and she feels better, and she lost 50% of her Ys because her funds were locked and she needed to sell. And I'm just
news. I don't know if that's a serious comment. I'm happy I sold all crypto I got and now I am calm. Well, first of all, if you have crypto and you're not calm about it, then whatever you need to do to get yourself calm, do that. And I support, because don't ever over leverage yourself or get in over your head or get involved yourself in something that has you not calm. And that being said, I lost 50% Ys only because my funds was locked when I needed to sell. That's the only way you do it. You literally lock your funds yourself. So you can't have something locked against your will. You choose how long you want to lock something up. I have already had Y stakes mature that I've been able to restake and exchange. I have Y stakes that haven't matured yet. So the point is that you're not supposed to cash out of a bond early, or else you pay the penalty. That was kind of that's kind of how a trustless, decentralized smart contract works. You have to honor your part of the contract by waiting that time. If you don't honor your part of the contract, then you don't get to earn that interest. You get penalized. So, but at least despite that loss in Ys, you're happy and calm, and that's what matters most. I would say.
I'd be pissed off.
I think something to speak on that point. I feel like when you get into an investment, you really have to take a step back from the emotional weight of the daily market, and you really need to look at the fundamentals of how does this work? How can I grow wealth? And the question isn't how can I turn $10 or X amount of money into adding more money, but how can I create exponential growth for a lifetime of wealth?
Yeah,
and I think that's something that a lot of people just don't structure in their head when they invest. And I feel like if you pull out of an investment too early, were you ever even really in it?
Right.
No.
That's true. It was just a moment, like it was a hunch you had for a bit, and then you know.
Were you really confident? And that's the thing. If you're
don't invest if you're not confident.
Yeah, exactly.
Yeah.
And that's our point. We don't talk about technical analysis to get rich quick and say jump in on this project. We look at long-term fundamentals and quality over the long term. In cryptocurrency and blockchain technology, what we see is a long-term future for projects that are revolutionizing financial markets, that are revolutionizing a lot of industries. And that's why I actually brought up this article, Tokenization at the Center of Digital Money, Format Wars, says a Citibank exec, right? And let's see where I pulled up. He says token infrastructures are always on, and the traditional financial system clearly is not. RTGS systems are not always on. ACH systems are not always on, but instant payment systems are always on. But that's the exception that proves the rule. Bond markets, equity markets, Forex markets, money markets, these markets are not run 24/7, but a DLT does. This guy is pointing out, the exec points out that there's an inherent superiority. Shucks, he alluded that building financial services. This is what I got all nerded out on. I love this. Building financial services infrastructure on tokens is superior to the current accounts-based model. I remember that in accounting school. Potentially, a world of tokens is more programmable than a world of traditional siloed financial infrastructure. And that's really what we're talking about. That's huge. Like, understand that our current accounts based model of doing business is about to be wiped away. All those king's horses and all those king's men needing to keep your books together again are no longer needed, right? Because we literally have smart contracts.
It's the opening of the financial commons. You no longer have to go to the gatekeepers.
Yeah.
And there's silos, you know?
Yeah.
Well, to speak more on that point, too, I mean, something that's super interesting, if you look at the amount of centralized exchanges that failed to make sales compared to the decentralized exchanges during this dip, when everyone was flooding over and trying to get out of the market, there was a lot more problems with centralized exchanges than there ever was decentralized.
I bet. I haven't followed up on that. I need to look into that. That sounds interesting. Do you have an article at hand? Or did you just saw?
I don't have anyone on hand. If I find it, I'll try to find that Medium article and I'll link it to you.
I'll put it in the comments if you want to. That'd be great. But yeah, that sounds interesting. I would imagine on big dips, on mass, when there's a lot of selling pressure, in centralized exchanges, there could be liquidity problems, right? With matching buyers and sellers. Whereas I feel like the automated market makers maybe have more of an incentive to not gum up that matching process, whereas the centralized, there's times where those exchanges aren't, when there's, it's they're charging a spread, so they have to calculate the price where they can make a profit and still match people. I just wonder if the automated method might be the reason why the DEXs are superior. I want to look into that.
I think so.
Further.
It's definitely going to be a major factor.
Yeah.
Altcoins and DeFi sprang back to life after a handful of decentralized finance tokens saw their prices increase. So this is saying that 400 billion, the market cap gains, DeFi tokens lead the recovery. Bitcoin's moved back to 38,000. And of course, this is going back. This is just synonymous with the article saying that there's a lot of inflows from Bitcoin out going into altcoins. We're seeing that the recovery in the past. Here's something interesting. In the past, didn't we all notice that Bitcoin was what led the recovery, and now we're seeing DeFi and altcoins leading the recovery, which is interesting.
There's a maturing happening in the space.
That's right.
We're moving from that teenage headspace of Bitcoin maximalism to a more adult, just a more evenly, a more reasonable approach, I think.
Right.
More mature.
That's the way I say it. More mature. I mean, look, when you first learn about cryptocurrency, it's all carnival. It's all speculative. You don't understand it. Then when you understand Bitcoin and you understand blockchain technology, you realize the value of a secure, decentralized ledger. But then you realize that, Bitcoin, there's no way Bitcoin could be the money and the smart contract platform that does everything and does it all. And that's when you realize there's a whole world of blockchain technologies that were created to fill the gap, to allow the world to move on to this technology. Anyone who thinks that Bitcoin is supposed to just be the only thing, it's dumb. It's dumb.
It's silly. Yeah.
It's ignorant. Does that mean that the whole world needs to wait for progress until all the Bitcoin coders can figure out a way to fit the whole world onto the Bitcoin? I mean, it's just ridiculous. No. And the world's not going to wait. And that's why there are so many other great projects and platforms being built. However, it's still like a base platform. I love it. I don't expect it to go anywhere. I feel that its value will only grow. I do see that Bitcoin is the spinal cord, in a sense, like it's the foundation upon which crypto assets can even exist, right? Because at the end of the day, cryptocurrency, blockchain technology is so new in its innovative use that many people don't know, is it really unhackable? Is it really secure? How do we know? How secure is it? Well, Bitcoin is the proof in the pudding. It's been going on for now, over 10 years, 12 years, and it continues to. So it will always be as the security protocol layer, the base security protocol layer. I don't see Bitcoin ever going away, and I see it always. However, I can see it flippening. I can see Ethereum or some other smart contract platform down the road being more valuable.
Still existing, still working, is just more trust built in the ecosystem just every single day.
Yeah, it's true. It's history. It's strength. It's strengthened by its every day. Every day it adds a little bit. It works. It hasn't been hacked.
And not only does it show that, but it shows not in security, but in that inflationary, the protocol is working. You're still seeing the Bitcoins being mined according to that standard. So when you compare it to other currency systems, you've got that security, that stability. It's got not just the security, but the stability, right? I mean, if I would have told you 5 years ago, hey, in 5 years, the central bank in the United States is gonna print a quarter of its currency in 1 year. I mean, you say there's no way, that's ridiculous. But yet these things can happen in the carnival world of fiat currency. You can have trillions printed, billions printed at the drop of a dime. So. More people are moving on. I'm excited about what Michael Saylor is going to continue to bring to the space, and more great minds.
He just put in 10 million. I think was 220 something Bitcoin he bought during this dip.
Good for him.
Good for him.
Yeah, I don't believe the market is just going to just take a dump. I feel like this is it's a good reset.
Yeah, more shakeouts to come. It'll be interesting to see. I always like to look at the doom and gloom scenario, but I hope for the best. And I would love to see a sharp return and going back to the bulls. For some reason, I'm going to say it before we wrap it up real quick, but I've heard that, and I haven't heard this being talked on YouTube, but a birdie told me in some research that a lot of the sell-offs we're seeing in the crypto market are coming from the institutional banks that are having to offload their holdings because they need to cover their short positions from GME and AMC. And the short squeeze in traditional markets is not over. And those short squeezes are still costing these hedge funds a lot of money. And so potentially what's been going on right now, a lot of these sell-offs aren't like a few rich people coming together trying to shake someone out of a leveraged position. In reality, a lot of these major dumps are coordinated sell-offs by hedge funds and institutions trying to maximize as much as they can get to cover their shorts because they're needing to pay these clearinghouses for their positions. That's what's going on right now. And I've heard that it could get a lot worse before it gets better. Now, I could be wrong, and I don't know, but that's saying that what that would mean is this. That would mean this. Let's say that this last year or so that we've been seeing all this crazy growth in cryptocurrency. What if most of that growth was not done from retail investors supporting cryptocurrency all over the world? What if most of that growth was from hedge funds and institutional investors buying up crypto assets in their portfolios? What if? And what if the squeeze that's being put on them right now to this date is causing them, and they don't care about diamond hands and long-term anything because they can always buy stuff back down the road. What if it's in their best interest to dump the majority of everything they bought right now so they can get their books clean again, which would, could bring Bitcoin back down close to the 20K range and could bring Ethereum $1,200, $1,000 range and that. So, or $1,500 range, depending on how bearish you want to get.
That could happen, but the question would be, what would the Michael Saylors and the other groups do as a reaction? How much of that supply could be dumped and bought up at what price? That's the question.
Yeah, so the question is how much control, how much do they, whoever they are, how much do they have? Are they going to dump? And I agree with you. Once they dump it, because the Michael say I will say this. I'm bullish long term, no matter what. If we see a major another crash shakedown, then for me it's like that's good news bears, good news gorillas. That's good news gorillas because you've gotten the short term weak hands out and you buy it up and you've got a new floor. I mean, for me, seeing Bitcoin at $20,000, even if we came all the way down to $20,000, and then we started seeing it go from there, I would look at that with a big smile on my face because 3 years ago that was an exponential high that no one could have dreamed of. So it's like it's all in perspective, and it's I'm used to these crashes. I almost expect at some point Bitcoin to crash down below 30,000 and to get into the 27,000, 25,000, get somewhere just above 20K. Just like when it's reset from 20,000 down to 3,000, 27, we'll see kind of that return.
That'll happen.
Well, something to speak more on that. Two things. First thing, I feel like there's two types of crypto enthusiasts. You have your crypto holders who panic buy, and your crypto noobs who panic sell.
Yeah.
But
true.
To speak more on what you were saying about institutional investors coming in and making this dip happen. I don't know if either of you guys use Reddit or 4chan, but there was some very interesting posts that were made from an anonymous person, and I'll read it to you guys right now. I got it pulled up on my phone.
Let's see it.
Hey guys, Insider here. For those of you that are not busy mumbo-bubbo LARPing and paying attention, there will be another announcement from China soon. Picture is semi-related. Can't tell you guys what firm I work for, but it's massive, and it's working with the People's Republic of China. The purpose of today's press release, along all the FUD posting, is to get Bitcoin price as low as possible before 7 a.m. UTC time. First, there will be a coordinated sell-off to drop the prices below a certain threshold and liquidate. And they want to liquidate one certain holder, but they can't outright say who he is. Once liquidated, the plan is to buy up all the reserves, essentially leaving him bankrupt. If you guys want to get rich, grab some coffee and watch for the big dip. Once it happens, there's going to be a really fast green upwards.
And what day is this now?
They posted that on the 18th.
And they're talking about what day are they? So what day are they projecting this to happen?
They didn't project a date for this to happen.
Gotcha. Just sometime in the near future.
But it will be at 7 a.m. UTC on that date. I heard that article.
Yeah.
So, we'll see. There's a lot of stuff floating around. This is where we get in the world now. Reddit, Wall Street Bets, look what it can do. It can be used to bring people together. It can also be used to spread FUD. We don't know.
Yeah.
Is this real, or is this just a piece to get people to buy up on some hopium?
One more thing to add to the mix when you're thinking about this issue. There's some options and futures that expire Friday. The CME futures contracts are expiring, and then I don't remember where the options are at, but there's an options contracts expiring, and there's been some trends where going into that Friday, the last Friday when these expired, there's a trend to have a sell-off going into it, and then to have a pump at the other end. So all of this kind of fills in it's aiming at the same point, is that we probably are going to go lower in the near future from here, and there's probably going to be a nice pump at the other end of that. That seems to be the consensus, and the question is just when.
And welcome to the wonderful world of crypto.
Exactly.
And on that note, we're a little 10 minutes over. Thank you guys for joining us. This is your hour weekly update. We are going to start pumping out 2 to 3 videos a week just to give you quick updates. And we'll continue with our Monday live streams and keep you up to date. But hey, don't forget, send us a message if you want us to cover anything in particular, or if you found a project too, as I walk us on over to the studio.
All right. Well, thanks for hanging out with us. Thank you, Jacob, for hanging. And it's always a blast talking crypto with you. And we will be up. We'll be making more videos. We have a good one coming up soon about gas fees. That's going to be interesting. So,
yeah, gas fees burning people in the world of DeFi. So be careful, because you could put money in Ethereum and never see it again because of gas fees. Do 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 do.
All right. Well, you want to say a final goodbye, Jacob? Or
yeah.
Cool.
Last thing I want to say is just keep it on wise, guys. Later.
Adios. Rock and roll, you